Where can a startup business get its capital without going to the banks? And what exactly does a venture capital do? Welcome to the 6th episode of The Pivot, and on this episode we'll be answering those questions and more. We've got the perfect guest for that. We're talking to the Director of Operations of one of the country's biggest venture capital firms, Foxmont Capital. Welcome to the show, Mr. Santino Ongsiako.
Hi, thank you for having me.
Hello everyone, you're watching The Pivot, your legal guide to startups, business, and the online world. I'm James Deacon.
And I'm Attorney Bernice. We are thrilled to have you again this week, and we're so excited to have our very special guest, Mr. Santino Ongsiako. Welcome to the show, sir.
Santi, it seems like you started in investment banking and you took a wrong turn somewhere and ended up here in venture. Or is that how it works, or are they a related type of business? Can you be an investment banker and the venture capitalist? Are they two different people? What happened
You can.
there?
I think you can definitely transfer skills that you learn in investment banking to venture capital. But I think the real reason why I entered venture capital was because of the kind of fulfillment and joy that I had when I worked with the smaller clients and being more actively involved in how they make decisions and the kind of relationship that I was able to build with them. Versus, let's say, if you're working for a larger client, then they normally have teams already in place, and there's a lot of processes already in place. They know what to do, and so I think it's more about them hiring you, let's say, to do whatever project that they ask of you, rather than asking for, okay, how do I navigate in this environment? And so I think it was because of that. Why venture capital became such an attraction to me, and I think it proved itself right. I proved myself right when I joined the firm in April 2020 last year, and I started to be more involved with helping out these entrepreneurs build their companies from 0 to 1. I think there's a lot of joy in that.
So for our viewers, can you just explain to us the term venture capital? What does that mean, simply?
I think by tradition, venture capital funds invest in fast-growing companies. That's a very basic definition of what a venture capital fund does. Okay. However, I think today it's become more defined, and where people tend to define startup companies as technology-enabled, innovative, and disruptive. And so I think, but at the very nature of it, it's being able to invest and help companies that can grow as fast as possible and make a return for their investors.
Right.
So how is this different from, let's say, a bank loan? Just getting a bank loan to do the same thing. We're a fast-growing company, let's just go and apply for a loan. How are they fundamentally different between that and a venture capitalist?
I think the beauty about the venture capital structure is that it allows the firm to take higher risks than what a bank would normally do. If you think about the core nature, core business of a bank, coming from a bank, myself, the primary mandate of a bank is really to protect and preserve clients' savings.
Okay.
Right? So, if you're a
fundamentally,
depositor,
that's a very different.
the basic fundamental of a banking institution is to be very responsible with the way they manage clients' funds and clients' money, depositors' money. And so, I think when they extend loans to generate interest income, they also need to be extra careful with the kind of the kind of creditors that they deal with, the kind of debtors that they deal with. And so I think for a venture capital fund, you seek out investors who are willing to take that risk with you, and these are typically accredited high net worth individuals or institutional investors who are aware and who are sophisticated enough to understand the risks that they're taking.
Right.
So that's one part of it, right? Just on the very basic fundamental level. But I think when you take it a step further, if you're a startup company and you approach a bank for a loan, you have to think about banks have what you call 5 C's of credit. Basically, the ways to evaluate whether it makes sense to extend the loan or not. And if you think about it, startups, they don't have assets and
They don't have,
collateral.
Like 2 years of operation.
They don't have credit history.
That's right. Yeah.
Right. They don't even have foreseeable. You can't even predict their cash
Yes,
flows.
that's right. Yeah.
Right. And they're operating at a loss normally.
That's
Right. And so it's very difficult for a bank to say, I'm willing to lend depositors money to a startup, to a company without that can't show me credit history, without that can't show me collateral,
That's
that can't
right.
secure the
Yeah.
loan with collateral, that can't even tell me how much money they're gonna make next month.
The startups, you just have like the pre-money valuation, post-money valuation projections compared to that of a traditional business. That's
Yeah. And
so
I'd
the
say
requirements are so rigorous with banks.
Yeah, and I'd probably say 95% of the startups that I've seen, like the financials of, they're as expected, they're still operating at a loss because they're focused on the product, and the profitability comes next to building a real product that can add value.
I like the way that you broke it down for us, Santi, because now I have a clear understanding of when you said the fundamental position of a bank and main is to protect the wealth of their clients and to manage their money. So the risk appetite is going to be completely different. So you really have to have this fundamental break in the system if you're going to fund this new digital economy. So we have to change the entire approach to it. This obviously opens up new legal issues between entrepreneurs and the venture capitalists. What are the most common legal conflicts that you have or that you know of in that space between entrepreneurs and the VCs?
I think we're very fortunate to have not had any
Keep it
legal
that way.
issues.
Yeah,
with
but
our-
where would you
with the
see most of it
companies.
happening, if ever?
Yeah, so it's a bit difficult to answer that, but I would probably think.
Or is it just with a contract
I'd
review?
probably think it would
regulations?
have to do a lot with commercial terms
Okay.
than the legal terms.
That's right.
And so I think while there are many venture capital funds out there with good intent, I think, especially since the industry is young, we do need to follow the global standard
Okay.
of, how funds invest in startup companies, and that's.
So there is a global standard for something as volatile as this?
I guess global standard for behavior and ethics.
Okay. Because
Okay.
really,
For what
we're
is
writing
just
new
and
rules every
fair.
day.
Yeah,
Okay,
I think
okay.
in terms of infrastructure, then we definitely have to come up with our own as a country and really think from first principles. What makes most sense given our situation? Of course, we can always look at developed countries, developed ecosystems as to gain clues on what makes sense. But I think at the end of the day, in terms of building infrastructure, we have to think for
Right.
ourselves.
Yeah.
But yeah, just going back to the first question, I think just the global standard for ethics and behavior. I think investors need to invest without the intent of acquiring, because I think as an entrepreneur, in order to build something great, you need to be in it for the long run,
Yeah.
right? When you look at the greatest startups of all time, Apple, Google, Amazon, I think when they started, I think they just wanted to build something meaningful, and you can't have. I think if you placed an investor, let's say a sharky investor with, let's say Jeff Bezos or Elon Musk, or at the very beginning, I'm not sure if they would have built their company, as well as.
So you're backing that horse and you trust that horse to just,
Yeah, I think investing a minority, with a minority stake with the full intent of allowing the company to grow, and with the idea of adding value without necessarily pulling the founder one way or the other. We're gonna invest in you, but you have to use so and so services. That also stops the entrepreneur from making the best decisions that they think is best, right? So, one product might be, might make more sense for the entrepreneur to use than the other.
Yeah.
But I think as an investor, you have to invest with that mindset
Okay.
that we're investing in you because we trust you with how you're going to manage your company, and we're here to help you.
And Foxmont has been doing that.
Yeah, I think what makes Foxmont unique is that what makes Foxmont unique from other venture capital funds in the country today is that we actually have our own investors that we consider clients. So similar to how a corporation has an obligation, has a fiduciary responsibility to its shareholders. We too have the same responsibility to our investors as clients. And so I think I'm not aware of any other venture capital fund that has that special arrangement. Where a lot of them are conglomerate backed, fully owned and controlled.
Right. Yeah.
The conglomerate is the client.
So you've been with Foxmont for about a year now, more than a year.
Yeah.
Can you tell us more about the partners and your role in the firm?
Sure. So Foxmont was founded by three partners. Franco Verona was the first founding general manager of Grab in the Philippines. So I think he started the operation with just himself and and Brian and I think Natasha Bautista was with 917 Ventures, and they really built Grab and helped build Grab to where it is today, right? From convincing people to use an app rather than to hassle yourself finding a taxi.
And it was a great story.
That whole transition itself.
It's brilliant. I use it every day. I literally
exactly. Same here. I think that whole transition itself, and trying to change the mindset of the consumer, right? That's a very difficult thing to do, and that was.
And with Grab, I was speaking to Brian about all his mini pivots in it. They didn't start out with this master plan. They pivoted into a lot of their most successful businesses, and there were a lot of failures, and that's startups for you. You have your favorite failures because it brings you something else. And it surprised me that he even said one of his favorite failures was they actually had a matching, like a Tinder portion in Grab. They actually, but it never took off. Yeah,
or
no,
like
for dating.
Really?
Within because I only found that out with a joke.
Okay.
When I said something about
that's funny.
Did you move into dating? And he actually said that was one of the things they pivoted into.
Okay.
But we're getting off track. What I wanted to ask Santi was, because there's a lot of people watching us right now, we're probably getting excited. Okay, venture capitalist, great. I've got a great idea. What are you looking for when you see a entrepreneur? Are you looking at network effect, the scalability, the potential of that person, the personality? Give us a little bit of a roadmap for those people watching on how to get your money from you.
Put it simply.
Basically.
Well, we have at Foxmont, we conduct a very rigorous analysis and due diligence process with many factors to consider before we make an investment. But I think if we just take a step back, and if I were to talk about the most general points, probably a vision for the future.
Okay.
And
How about
a
the
passion
team?
for the product. I think the team just has to have some kind of track record and no red flags.
Not really the primary concern for the firm.
It's definitely definitely one of the many things that we evaluate. But I think it would have to. I think it's just finding entrepreneurs with a deep passion for their product and a differentiated view on how to approach their business and approach scaling in the country in the unique environment that is the Philippines.
Okay. It's very contextualized.
Yeah, and so I think when a founder says, "Okay, I have an amazing idea," right? Many entrepreneurs might have the same amazing idea, but when they tell you, "Look, this is how I'm gonna do it," because the issues are actually this, right? The issues are actually X, Y, and Z, and people don't really notice that. And I guess
like they
when
know the playing field.
they
and
really
know how
understand
to
the playing
do it.
field, and
Right.
and I think when you're able to actually show that you understand it really well,
And you know how to solve the problems on the ground.
and so far your track record speaks for
Oh,
itself. I think that would be probably the most exciting opportunity
Yeah, because
for
you hear
us.
pitches all the time. Like I don't know how many
Yeah,
pitches you hear
I'm sure.
in
We
a
go
week.
through many.
How does the process go about? Like they email you, they go to your office. How does it?
So
go
I
like?
think we're very fortunate that almost all of the investments that we've made, and I think they're really, I think they're really high quality
Are
investments.
you at liberty to discuss your portfolio?
Yeah, definitely.
Yeah.
I think we're lucky because a lot of it came from internally sourced companies. We
recommended
the
by-
team, is reached out to them or is aware of something going on. They bring it to the
like
table.
a friend of a friend?
Friend of a
Interesting.
friend.
Okay.
And so a lot of I think from our first fund, we had 15 portfolio companies, 15 investments. 13 of them were internally sourced.
Oh,
And
wow.
2 of them
Okay.
were actually sourced from our portfolio companies.
Oh, wow.
So it's our
Okay.
portfolio companies that said, hey, like I have an exciting opportunity for you and I trust you as an investor, so we wanted to refer them to you.
You mentioned about the unique
Yeah.
situation here in the Philippines. Obviously, something that you really have to be considering. What do you think of our 2019 Startup Act?
I think
You watched the first episode, right?
yes,
Just
I
checking.
I've definitely watched the first episode.
Yeah, we did discuss maybe just like the basics of it, but
Yeah.
Did you watch that episode? Did you smash the
Yeah.
like button? Because if you haven't,
Yeah, I
now's the
have.
time to smash that like button.
Yeah, he did. He messaged
So-
me about it. Yeah. So
Yeah,
what do you
like-
think about the law?
I think it definitely sends a strong signal that the government is there to really support the country's
Yeah.
ecosystem. And
Were
I
you
think
happy about it, like when it came out or when you heard
definitely because I didn't really think that the government would be that as
Supportive.
show that much support as they do with an ecosystem, especially with the kind of problems that they have to deal with on a
That's
day-to-day.
right. Yeah.
You know,
And something so novel like
We're
this.
used to them being out of touch, basically, and they
Yeah,
nailed
with
it this
something-
time.
I feel like it's a step. It's a definitely
Of course.
one step forward, and I think that the fact that they were able to outline the initiatives or set in place the initiatives in the app that really help the ecosystem takes it another step further. It's not just about creating a framework, but
That's right.
it's actually saying, okay, here's the framework, but we're actually gonna do X, Y, and Z. And so, for example, one of my favorite parts about the startup app is the fact that they're actually allocating funds to invest in companies. The grant fund, and I think the grant fund and the startup venture fund. And I think what that does is long term, that allows them to empathize with
right.
the bottlenecks that any investor would have to go through. And so I think once they can empathize with that, it would be easier to say, actually, maybe we
You
should.
have other problems.
Yeah, there are other problems
That's
that we
right.
need to solve.
That's right.
Right. So I think I would think that this is the start of them creating an environment that makes it easier for investors to come in.
That's right.
Because that's one of the advocacies that we share at Foxmont. It's promoting the country to regional investors. It's telling regional investors, hey, come
You're
in,
welcome
like
here.
join us here.
That's right, yeah.
Provide access to capital for entrepreneurs. Because I think as a local fund, while we're the largest independent venture capital fund in the Philippines, we're still micro compared to the regional
big
funds,
players,
and so
yeah.
we don't really see them as competition, but we see them as collaborators.
You know, Sandy, you were saying about how you the way you look at sort of how you evaluate the projects is for stuff in the future. Is there any space in particular that you're kind of saying that this is the growth space, either transport or energy, or do you have a particular fertile ground, should we say, that people
Yeah.
should be spending the time in?
Yeah, definitely. So we can talk all day about sectors, and this long short of it is I think e-commerce is probably the most exciting opportunity to look into, because first, I think among the many sectors, the sectors that I'm most bullish about are the sectors that had an optimistic future pre-pandemic.
Okay.
Was accelerated, where growth was accelerated throughout the
There you go.
pandemic, and where optimism still continues to be the case even post-pandemic. E-commerce is definitely one of them. I think the kinds of businesses that have transitioned from brick and mortar to online,
That's right. Yeah.
for one, and I think it's all over, right? You buy for example, for myself, like I buy goods and services now. online. I don't even, and I think I'm going to continue those habits
Exactly,
as well. And
post-pandemic.
surveys say the same thing. You know, almost all people say that they're going to continue that habit. So I think to answer that question directly, e-commerce is probably the most exciting space for me in the Philippines. But I think I sort of want to talk more about what, you know, how to really think about the Philippine market, like, and you know, what, as an investor, if you're coming in, how to really think about how you evaluate the market and where to go. I think it's thinking less about sectors,
Okay.
and thinking more about people, and where people are moving and where people are going. Those are the indicators that you want to attract. So I think that I place it in like an analogy of investing in, let's say, an NBA team or a
Okay.
basketball team.
Okay.
You know, if you asked about sectors, you're asking about which team to invest in, right? But what I'm saying is, you want to invest in the team after the draft,
Okay.
after you know where players are moving, right? So you want to, okay,
So you're betting on the
where's
players.
LeBron James
I
moving
see.
next,
I see.
right? And that's the team that you want to follow. So I'd say the same thing about looking for opportunities in the Philippines. You know, you want to think about generations and where, you know, you want to think about where these founders are coming from and what companies that they build their track record in, and those are the exciting opportunities. So, for example, you know, if you look at data and information, you might think that the fast-growing companies in the Philippines are going to be in e-commerce, like I said, or fintech. But you know, for example, a lot of these, for example, Kumu is another exciting
Yes,
company.
yeah. Which Foxmont supported.
Foxmont invested in, luckily, and fortunately in 2018.
Right.
Media and entertainment, social media, which is, I think, when you evaluate, if you evaluate like on a sector basis, you wouldn't arrive in social media, right? And so you want to think about it that way if you want to find the best opportunities out there.
Okay, let's recap a little bit because we're running a little bit out of time, but let's walk people through the journey. I know that, I guess I can just picture a lot of our audience going, okay, that's great, but how do I get part of this? How do I get into this with Foxmont?
So we do have startup people watching.
I'm
our
sure,
show,
and
yeah.
you know, I mean, like,
And their questions are very pragmatic, very practical, like
Yes.
how to do it.
like exactly. Well, what's the first step? Do they email you? How do they pitch it? I mean, like, the differences between, let's say, going for a loan themselves versus an investment. The investment you don't need to pay back. That's how investments work, right? You are taking the risk with the entrepreneur versus the loans, of course. Well, you're paying back that money, and so you're taking all of the risk. Could you walk us through the journey for some of the startups out there and how they can access you? What's the first, second, and third steps?
If you don't have our email addresses, I think LinkedIn is probably the best place, actually, because it's more quiet to us. rather
Yes,
than
and it's more
emails.
professional.
Yeah.
And what are they? So that streamlines. What are they sending you on LinkedIn? Obviously, you don't want their whole life story. You don't want, you know,
Their pitch
just
deck, maybe.
how do they structure that first email to you or that first message to you? I have a great idea. I'm going to be
I
the
think,
next
you
Jeff
know,
Bezos.
a one paragraph sincere message, whatever that is enough. Whatever that sincere message is, but it would be great if you already attach your
Pitch
pitch deck or presentation, or even, you know, at least a website, and so that we don't have to request for it and it takes more time for you to send it back. And then I think from there we look into it. One important note for entrepreneurs is that the way investors think is that investors normally have investment parameters.
Okay.
And so, for example, that's normally in terms of geography, by sector, by stage, by growth stage, by, let's say, by investment size. And there are many others. In our case, we focus on the Philippines, and we make an exception for Filipino-founded companies based overseas. But we focus on the Philippines. We focus on early stage, usually seed to Series B type companies, and we're sector agnostic. So we look at anything, actually. And so I think once investors just need to understand that first before they reach out to an investor, because they might feel like they're rejected when it's not a real rejection.
Okay.
So, for example, you know, I've had many companies approach me before, based in another place in the world, and I'm sorry, there's nothing I can do. If we can't invest in you if you don't meet our parameters that we promised our investors, right? Our investors invest in us thinking that their funds will flow in the Philippines, right? So that's the idea. I think they just have to understand the parameters first, and then reach out to any one of us. Yeah.
So do you have like a positive outlook for the startup ecosystem in the Philippines? What do you think about it, like in the next 10 years maybe?
Yeah, well, I think when you look at other developing, when you look at other successful, robust ecosystems in the world, our favorite example is Indonesia.
Oh, really?
And we like to say investors, and this is a very popular theme when you talk to investors. A lot of people say that Philippines is following the path of Indonesia in the next 10 years. It's actually 10 years, like similar to your question. And when you look at when you look at the history of Indonesia's startup ecosystem, you'll notice that it all started when, of course, the availability of entrepreneurs, we have that, but also the entry of country-focused independent venture capital funds. So
like Gojek was that
so we're talking about, that was the generation of Gojek, Tokopedia.
How did they get started? Through the VC type of
through independent country-focused venture capital funds like East Ventures, Alpha JWC. These are funds that weren't conglomerate backed, so they could really invest without restrictions. They could be as flexible as they want, and they could help the company and and bring them in whatever direction that they want, right? And so I think that happened around 2010.
Okay.
In Indonesia. That started to happen in 2020 here.
Okay.
And when you look at Indonesia now, they have 5 unicorns.
Oh wow.
It's very easy for companies to get funding in Indonesia, right? And I think it started with that. Because once you have your first unicorn that breaks barriers,
Sunod-sunod na.
everything else follows. The
Great,
ecosystem helps itself.
So we'll get there.
Do we have a unicorn yet here in Philippines?
GCash.
GCash?
When you talk, Mint is a double unicorn.
Okay.
But Mint is GCash. So if you're talking about unicorn, we've definitely achieved that as a country. Although another indicator
Is that
I'm looking
considered
for-
Filipino, the GCash? Because our investment in that, is that wholly Filipino or?
Well, I like to say it's Filipino.
Yes,
whether or not it
As far as I know,
because it's a
Filipino.
company. I mean,
It's a
at the end of the day,
domain.
it's a company serving Filipino customers, Filipino users. However,
And it's
another
really changed the landscape of how we transact now. Huh?
definitely,
Yeah,
definitely,
yeah.
and
And just in the span of, like the pandemic.
months.
The pandemic just catapulted
Crazy
this
high.
into.
Yeah, from
Usage.
20 million users in Jan 2020 to 46 million users as of June.
Yeah.
This
There was
year?
actually a time, like 2 weeks, I didn't have any cash, just GCash, pay everything. 2 weeks.
Oh, there was like a few years of my life I didn't have any cash.
Just utang.
Yeah, just utang. I didn't even have
Which will
GCash.
be
I
our
had no
topic for the
cash.
next episode. You know, Tito James, we should have Santi come back.
We need to.
We need like a whole day with him.
Because
to
we just
talk
scratched
about-
the surface,
We
and
did, we
there's
did. And
so
much more
absolutely.
to discuss. Yeah.
And I think there's so much potential out there. People who are watching us right now, getting all their idea, getting very excited about this. If you have any questions for Santi, pop them in because we can always answer them also in the next episode. And we also have committed on air to get Santi back so that he can help walk us through this very, very exciting new space of the Startup Act and how to get access to that VC capital. That's really important. Actually, it's just VC funds, not VC capital. That's redundant.
The
One of them
ATM
should not-
machine.
ATM machine again. So there you have it, folks. We hope you enjoyed this episode. It wouldn't have been possible without our friends from
Mama Lou's Italian Kitchen. So thank you very much. Of course, thank you, Santi, for your time. Such a pleasure to have you. So again, our sponsors, thank you for always supporting us. Mama Lou's for the delicious lunch. And of course, South Bank Cafe for the amazing Spanish latte. Thank you very much for supporting us. And also for Home Lab for keeping us safe. And we have Home Lab apps now. So you can download it in your iOS and Google Play. You can actually have a facial. So it's like home care everywhere. So thank you so much, Home Lab, and thank you again for all those who are watching week after week, especially my entire province. To my family, thank you very much.
Yep, thank you very much to all of you guys, and we'll see you all in 7 days. This is The Pivot, Signing off for today, I'm James Deacon.
And I'm attorney Bernice Piñol, and this show is brought to you by the law firm of Piñol, Santos and Associates, and a clan group of companies. Thank you very much. See you next week.
Don't forget to thank Santino Ongsiako, our
Thank
guest
you,
today as
Sandy.
well.
Thank you,
Come back
everyone.
soon.
Bye, guys.
Bye.